This is Blair Jensen with Downside Hedge. In our last video, we gave an overview of how the Downside Hedge Twitter sentiment indicator is calculated, and also how we use it in tracking short-term moves in the S&P 500 index. In this video, what I want to focus on is how we use it to time trades for individual stocks. We don't use our sentiment indicator alone, but we do use it as confirmation for low-risk setups. The most important thing to notice when using sentiment as a technical indicator is the trend of smooth sentiment. When the trend of smooth sentiment is moving upwards, it's confirming an uptrend in price, and this shows that traders on Twitter agree with the price movement, and they're buying or accumulating stock as the stock moves higher. When the sentiment indicator starts to diverge from an upward movement in price, it signals profit taking and overhead resistance for the stock. Using the two principles of confirming sentiment and diverging sentiment as a guide, let's look at a chart of Goldman Sachs as an example of how to put them into practice. Out of the July bottom, sentiment confirmed the move in price by staying above zero and staying in a fairly well-defined range. After Goldman Sachs moved higher for several months, it started to consolidate. It fell down to the 50-day moving average and then hovered near that area for about 6 weeks. During that time, it put in a slightly higher low, and at the same time, smooth sentiment put in a higher low as well, confirming that people were accumulating the stock near the 50-day moving average. This was our first clue that it might be a good time to buy the dip in Goldman Sachs. Confirmation of the setup came when the stock moved fairly sharply higher on a daily basis, and with it came what we call an initiation thrust, a very high print in price near a turning point. Also, this setup was confirmed when smooth sentiment broke the downtrend line, the prevailing downtrend line that was kind of confirming this minor move. So when it broke higher, that gave us an indication that the stock was most likely to move higher going forward. This is the point we wanted to make about smooth sentiment earlier, is that following the trend, watching it confirm here and then watching it break above this downtrend line that was confirming this small move, told us that bullish tweets were overwhelming the bearish tweets, and that people liked this price movement and believed that it would move higher. The stock did move higher, but as it did so, as it started getting into this peak here, notice that sentiment started to diverge. We got a confirming trend line as the stock moved higher, but at the same time, we started to get a divergence. What this divergence tells us is that people are starting to take profits and tweeting about it. They might be hedging their position or tightening their stops. So if a lot of other traders are tightening their stops or lightening up on their positions, it's probably a time for us to do that as well. So at this point, we're starting to look for signs of a reversal. And we got the signs of that reversal when the bears, their bearish tweets finally overwhelmed the uptrend of the bullish tweets. So on this day was the day that we felt like, okay, we need to tighten stops. And this is what we call a consolidation warning. Not that the stock's going to turn over or have a severe downtrend, merely that there's a chance that the stock's going to consolidate. And the stock had a good day up right after our consolidation warning, but then did start to consolidate. So that shows an example of how we watch the trend of sentiment for clues that other traders are either accumulating or taking profits. We look for the bullish trend to overwhelm the bearish trend near obvious support levels, like trend lines or moving averages, and that's what provides low-risk setups. You can visit Downside Hedge for ongoing commentary on Twitter sentiment and trade setups for the individual stocks that we follow.